Hello, I'm Jeff Korzenik, Chief Investment Strategist of Fifth Third Bank. Last week, the Federal Reserve met, oil prices eased, purchasing managers hinted at synchronized global growth, the U.S. labor market showed strength, wages rose, and quarterly productivity bounced. But let's face it, the real driver of markets during this eventful week was the pending U.S. presidential elections. As polls tightened, the traditional investor aversion to uncertainty sent stock prices lower. By Friday's close, the S&P 500 index had recorded 9 consecutive declining trading days. While the aggregate pullback was modest, this marked the longest stock market losing streak in 36 years. By the time some of our viewers watch this report, this uncertainty will hopefully have ended, and we will have a new president-elect. On the assumption that this will be true, the markets will once again focus on economic fundamentals. So last week's data may not have influenced the investment markets, but do inform us about the health of an economy that will ultimately have much to say about portfolio performance in the quarters ahead. What did we learn? U.S. purchasing manager surveys in both manufacturing and services supported the case for continued U.S. economic growth. Perhaps even more encouraging, the parallel measures in other countries suggest the possibility of broadly coordinated growth, opening the path for greater confidence in a bullish forecast. American labor markets also produced a solid report. Although non-farm payroll gains in October were slightly below estimates, positive September revisions, a decline in the unemployment rate to 4.9%, and a monthly increase in average hourly earnings of 0.4%, slightly above expectations, all pointed to continued economic strength. An impressive annualized 3.1% gain in third quarter productivity helped allay concerns that wage increases would quickly spur broader inflation. Finally, the Federal Reserve Board's Open Market Committee ended its November meeting noting many of these underlying trends, but taking no immediate action. The Fed's commentary, however, gave further support to those, including Fifth Third, who expect a rate hike at the December meeting. As always, we'll be watching and reporting back to you. Thank you.